Okay, good evening. Welcome to the Ray White McPherson Property Management Investor Evening. We are part of the national event which is being held across New Zealand. Thank you for coming this evening. Pleased to see such a great turnout. We hope that we've got some great content for you. We've got a mix of information for you this evening for just on the market. Obviously there's been a lot of compliance changes, so we have a few updates there with regard to methamphetamine. We've got the health and safety standards and other obviously smoke alarms, which we'll touch on across the way. We have speakers from Kendon's who will be talking about investment accounting. We've also got some very interesting content regarding EQC and rollover claims, which some of you possibly may not have thought about, but hopefully that will be of interest to you. We've got a couple of videos that we are using as part of the national campaign, then we have a speaker from State Insurance who will be talking to you about owner's risk and your properties and how best to protect around all the legislation that is happening. Just in terms of the market for property management, as you'll know, it's still pretty competitive out there. There's still a lot of stock, so I think today Trade Me just over that 1,500 mark in the Christchurch city. So for our tenants there's plenty of choice, and as you know there's certainly been a bit of a softening in terms of our yields on our leases. From a tenant's point of view, they're getting pretty savvy and there's lots of choice. And obviously things that are cold and damp and not insulated and all the rest of it are probably languishing for longer, which is obviously what we're looking to improve on in terms of our stock and continuing upgrading the value of our assets for you. I'm going to introduce as our first speaker, we have Lance Edmonds from Kendon's. He will start the first part about the accounting packages and services that, you know, for you and helpful information when you're considering your loan structures, depreciation, some of those good points. Okay, over to you, Lance.
Hello everyone, thank you Elizabeth for the introductions and also giving us the opportunity to talk to you all. I'm Lance Edmonds, I'm one of the directors of Kendon's, which is a public practicing accounting firm, and also Lisa Mead will be also presenting as well. She's one of my managers. We are a mid-tier chartered accounting firm with 4 directors, 31 staff. We're a proactive chartered accountancy firm. We mainly deal with small to medium-sized business and family-owned businesses. So we're going to give you a bit of an accountant perspective on property investment and some topical issues that may impact on you as investors or potential investors. And the following topics we're going to talk about is deductible expenses. We're just going to briefly go over what you can claim in regards to your rental investments. We're going to particularly look at the major deductions, and the major one is interest and repairs and maintenance, and also just looking at some common mistakes that we see with these type of expenses and make sure that we can maximise those deductions. Now, Lisa's going to talk about EQC payouts and the rules around rollover relief. She's pretty passionate about it. It's an area we are not worried about, but there is a short period of time where these rules will expire. 2019 is where the rollover release for Canterbury will expire. So we're seeing a lot of mistakes in regards to the application of those rules and how to apply them, and also there are some potential chances to actually if there is a mistake, to review them, get them corrected, and potentially also mitigate the tax consequences around them or even deferring them. But it's a subject that we see that for investors you need to have a look at this and make sure that it's been dealt with correctly. Right. So I'm going to go through the general rule for deductions for tax purposes. There needs to be a nexus to your revenue or your revenue account. So for rental investments, bank charges, insurance, house and contents, interest, rates, all deductible, as long as it's linked to your rental property. And a lot of you will know that. You can claim motor vehicle expenses, and in regards to that, if it's incurred for the purpose of a rental property. So if you're going to go and inspect, or you're going to go to Mitre 10 to get some paint, and then drive to the rental property and paint the house, then motor vehicle expenses are deductible. So there's two ways of calculating that, and the easiest one is what we call a mileage claim. So you keep a record of how many kilometres where you drive to and from in relation to your rental activity, and you can use the IRD prescribed rate, which I think is 73 cents, or you could look at a motoring association like AA, which usually has a higher rate. In that mileage claim, it factors in depreciation on your vehicle, repairs, fuel, warranty fitnesses, road user charges. So keeping a record of that, you're required to just keep a record of the kilometres. It's easy to do. The other option, where some clients do if you've got a large rental portfolio, is actually look at the actual cost. Go for 3 months, work out how many kilometres it relates to your business activity, and you work out the business percentage. So you can so for example, if it was 10% you're using your vehicle for your rental properties, you can claim 10% of your actual costs. But generally, if you've only got a couple of rental properties, generally you just keep a record of your mileage and then claim that. But there are ways of getting further deductions. Repairs and maintenance, that's an area that I'll go into a bit more detail, but if you're repairing or you're reinstating your asset, you can claim that as a deduction. Any assets under $500, you can claim in the year that you incur that cost. So if it was an oven worth $499, you get to claim it. If it's over that, unfortunately you can't claim it the full price in regards to that asset. You have to what we call depreciate it over the life of the asset. Okay. You can also make a home office claim. So if you have an office, you've got storage where you put your lawnmower in, or whatever you're doing in regards to the activity, you can claim a percentage of your home costs. But generally what we find is the home office claim is pretty low. But if you have a big portfolio and you have got a separate office and you've got a storage area, then you could claim a percentage of that. Okay. Depreciation, like I said, if you've got assets over $500, you can't claim the full price. You've got to park it up, we call it on the balance sheet, and depreciate over the life of the asset. So the problem we have in regards to, back in the day you were able to depreciate buildings, but the depreciation rate now is 0%. So there's no claim against, if it's a residential property you can't claim depreciation. It's 0%. But if you have commercial ones you can break your asset down. But generally it's your chattels and your plant and equipment. The biggest deduction generally for most rental investors is interest. It's the debt that's over your rental property. Now, to get the interest deduction, the money you borrow must be used for income purposes. It's across the board for all businesses, but in regards to rental properties, you have to say, did I borrow to buy that rental property? So I'm going to go through a little example where you have a situation where there's some common mistakes where we see all the time. You've got a current family home worth $400,000. The debt on it is $100,000. You decide to look or buy or build a new family home, say for $700,000. You borrow the full amount, meet the LVR requirements, and keep the current home as a rental property. And you go to the bank and said, hey, we want all the debt over the rental property because we want that interest deduction. The issue we have is, what was the borrowing for? It was to buy a family home. It wasn't to buy a rental property. So the debt in regards to the rental property is only $100,000. Okay, not the $400. So how do we structure the affairs to get the debt legitimately over that rental property? What you do is look at, should I restructure my affairs? Should I transfer it to a company or a trust? And there are special companies called look-through companies, which allows losses and profits to fall down to owners. So what you do in that sense is you form, say for example, you form a company, the company buys the property off you, you go to the bank, or the company goes to the bank, I would like to borrow some money to buy a rental property. The company does. And it's going to be buying it from yourselves. So basically the bank says, yes, here's $400,000. They pay you $400,000. You pay to buy your new family home or build it, but the company said, I've bought a rental property, I've borrowed. So suddenly you have 400,000 debt now deductible. So to give you an example here, the original scenario was the debt is $100,000. We've used, say, a 6% interest rate. The deduction you get is $6,000. The rent's still the same, all the other deductions, but you've got a taxable profit of $7,800. If we use a tax rate of 33%, you have to pay tax of $2,574. If you keep the status quo. If we restructure, the same rent, the same expenses, but the debt's now deductible. So $400,000, you've got interest rate of 6%, you've got interest deduction of $24,000. So suddenly going from a profit situation, you've got a loss situation. Now if we can use those losses up, offset against your personal income, potentially, you actually get a refund of $3,366. So you're going from paying tax to suddenly getting a refund. So it's around about 6K reversal. But what we see is a lot of people, no, we'll go to the bank, put the debt over it, hold on, what is the nature of that transaction? It was to buy a family home. So there are ways of restructuring to be able to legitimise your deduction. Us accountants' job is to try and get all of your debt deductible, okay? So that's just one example. Another example we see commonly is that you may already have a company and you may already have investment properties in there and you may have debt, but a lot of the time you'll be tipping money into that company to service all your loan repayments and your expenses. So that owner account starts to accumulate, so you're owed money. Well, at that point you could go to the bank and say, actually, the company goes, I want to pay back the owners. And you might have accumulated being owed $100,000. So suddenly you say, well, bank, give us $100,000, company. Yes, why not? You get paid out $100,000. You pay off your family home mortgage or part of it. Suddenly we've done a further way of actually getting deductibility on the loan, $100,000 more. So there's ways of doing it. You've got to be very, very careful. You can't restructure every year. And there has to be other reasons why. It's not just to avoid tax. It might be, well, sometimes we see where you've got a company, you decide actually we're starting to make a profit now, I might decide to move it into a trust for asset protection mechanisms. The overriding factor is asset protection. It's not to avoid tax. So you've got to be very careful around those rules, but there are ways of actually legitimising deduction. Our job is to get all of it. Other common mistakes we see is that you form a trust, you put your rental property in a trust, and a lot of lawyers put the debt outside of the trust. It's quite common. The problem is, I need the debt in the trust to get the deduction. So that's another common mistake. Well, it relates to my rental property. Yes, it does, but it's in your own name. It has to be in the trust. Okay? The other big deduction is repairs and maintenance. Now, like I said before, depreciation is 0% on buildings. So we're a wee bit more aggressive in regards to repairs and maintenance. So what is the distinction? If you are reinstating your asset to original state, it's repairs and maintenance. If you go beyond that, it's called an improvement. It's considered capital, you've enhanced the asset, it's non-deductible. So it's a very grey area. You've got to say, am I reinstating it? Am I replacing the roof with like for like? If you are, that's repairs and maintenance. But if you're replacing with, say, instead of tiles, gold-plated tiles, that's improved potentially. So there's ways of looking at it. Now, other common mistakes is that, right, I've got rid of a tenant or the tenant's left, I'm going to do a big clean-up. Okay, I'm going to paint, I'm going to replace the carpet, I'm going to fix the roof, I'm going to do a lot. In some ways, when you look at what you've done, you're actually improving it beyond what it originally was. But if you drip fed it, like you did the painting one year, you did the carpet the following year, there's probably an argument that is maintenance rather than actual capital improvements. Another example that we have quite common is insulation. So if the house wasn't insulated and you put insulation, you kind of think that's repairs and maintenance. It's not. You're improving the asset. It's non-deductible. If you had insulation and you replaced that, you could argue repairs and maintenance. But you've got to look at the nature of what that insulation is. Is it better insulation or whatever? So you've got to do that little step where you say, hey, is this legitimate? Now I'm going to hand you over to Lisa. She's going to talk a lot about rollover relief, and I'm hoping we have some Q&A questions after this. So we'll go through the details of this. Thanks.
Okay, hopefully you're all as excited about this as I am. So basically, I'm just going to talk about repair payouts and full payouts for properties affected by earthquakes. So we'll just talk about the Christchurch earthquake back in 2011 first. So basically, we've got situations where buildings were deemed uneconomic to repair or irreparable. So these two times are completely separate to a repairable event. So when you've got uneconomic to repair and irreparable, we have a situation where there's the possibility of having depreciation recovery income. So rollover relief applies and depreciation recovery income applies only when there has been previous depreciation claimed on that property. So depreciation was able to be claimed up until 2009 financial year, and after then the IRD took that away. So if you have a property that had been depreciated before then you've got a situation where you might have some income based on whatever you've received for insurance. I think my slides are cutting off slightly. So a full insurance payout means a full disposal. So that is effectively a sale of that property out of your accounts or your tax return. So when you've got a sale, the proceeds reduce the book value, and we've got the potential for depreciation recovery income. And depreciation recovery income applies when the insurance proceeds received are more than the cost of that property, which in most cases will be the case. And depreciation previously claimed will be taxable income to you. Now, when that's taxable income is another story. So the reason that it's taxable is because it was a tax benefit before, so you would have claimed that depreciation against your income previously. So when a property appreciates, it increases in value, and so effectively you've got to pay that tax back to the IRD that you claimed before. So I've just got a quick example here, and this is a common situation for a lot of the clients that I've seen who have had insurance receipts. So this is just using an example of a building that has cost $250,000. So this is not including the land value. So we've got an amount of depreciation that's previously been claimed of $50,000. We've got a book value in your fixed asset schedule of $200,000. So that $50,000 is showing as accumulated depreciation. So if you've got accounts at home and you want to just check what have I got as accumulated depreciation, that is the figure that is going to be potentially taxable income to you at a later date. So for this situation, I've just said we've got an insurance payout of $400,000, and that is for the building. This means that the $400,000 is above that $250,000 cost value. We've got taxable income at some point of $50,000. So under depreciation rollover, you may have heard of this term. This is the IRD's way of being nice to us, basically. We're able to defer that income. So there's an Income Tax Act section that allows us to apply for rollover relief. So we are able to do basically a letter that says to the IRD, I want to defer my rollover depreciation recovery income to a further year. So we've got, in this situation, $50,000 that we want to defer. We've got elections and re-elections. So when we do our first election, that's really important, but each year after that, we need to do a re-election as well. And this is where I've seen quite a few issues with clients and previous accountants as well, missing that re-election. It's really important that you're aware of doing the first election when you want to defer that income, and then the following years need to have a re-election as well. So with these elections, you basically need to be looking at having a replacement property. So a replacement property needs to be in the Canterbury area. We've had issues as well where clients have purchased other properties to defer this income into, but they've actually been like on the west coast or outside of that Canterbury area, so you need to be aware that this property needs to be in the right place. So we've got other insurance events, we'd call them, earthquakes just recently as well. So we've got Wellington, Huranui, Waiau, Kaikoura, all of those places that you might have rental properties in as well. This affects that as well. So we need to be really aware of where that property is and where we're buying a new replacement property, or if we're rebuilding there as well. So we've got timing of depreciation recovery income is really important as well. So we've got, the IRD has a very strict rule. So we need to be telling them when we receive those proceeds, but more importantly, when we are aware of what we're receiving. So we might find out about what we're receiving one financial year, and we might get paid in the following. Now, they don't care about when you receive the funds. They want to know when you are aware of it. And I've seen situations where the IRD will deny your depreciation rollover because you haven't told them that you've actually known about the money that you're going to receive. So this is a really big issue for a lot of clients. As well as that, it's really important to file that depreciation rollover election prior to the tax return being filed. So a lot of situations I've seen where an accountant might have filed the tax return, or an individual may have filed the tax return, and that depreciation rollover election hasn't been made prior to that, and that's where the IRD will deny that deferral as well. So timing is very, very important. And that's just that again, the IRD needs to approve that before you file the return. So the main issue here that I want to stress is that we've got until the 31st of March 2019 before this basically becomes potential taxable income to people. So we've got to have, by the 31st of March 2019, a replacement property. If we don't have a replacement property for any building that we've received a full payout for under uneconomic to repair or irreparable, that depreciation recovery income will be taxable to you. And that tax will be due in the following financial year.
So it's not like forestry indexation and things like that?
No, it's very strict. So we've got 31st of March 2019, and that is the deadline right now.
We're hoping that
Yep.
they'll roll it over a couple of years, but we're trying to lobby as hard as we can.
Yep.
Because there's a lot of clients that haven't done that replacement, they haven't cleared it, done all that. So we're hoping they'll extend it, but there's no guarantees.
So it's got to be what that state of 50,000 got to be done in 1 year, you can't roll it over 3 years.
No, you can't spread that amount across any amount of years. It's pretty much 31st of March 19. If I've got $50,000 of a depreciation recovery income and I haven't purchased a new property or rebuilt, if I had a property that was demolished, in that financial year, that's it. So 31st of March 19 year, that's the deadline. They haven't deferred that any longer. We are hoping that they will, but at this stage, that's it.
But if you do find a property, you can then put that accumulated depreciation.
Yeah,
on your property.
so
you
I'll
can
get to that.
Just running it
Yeah, so there might be some issues where you don't have the funds to buy a new property, or the bank might not lend to you. So that might be your circumstances might have changed. We've got a limitation rule. So this is where the IRD doesn't allow you to defer the whole amount of that income to a new property if it didn't cost the same as it previously did. So this is really important as well. If you're going to buy a replacement property or rebuild the previous one, make sure it is the same cost as it was previously or more. What else we got? So pretty much the effect of rollover relief is that it takes away the effect of the earthquake even happening. It says, okay, we're going to defer this into another property. It's accumulated depreciation still. It's just like it was before. It'll get triggered when the property is eventually sold. So that's your rebuilt or your new purchased replacement property. So I've got a quick example here. This is just where you've only purchased one for $200,000, but your original cost was $250,000. You're going to have some income there. So that's going to be an issue. We've got some new legislation that you might want to be aware of for Hiranui, Kaikoura, Wellington. That's got some other dates, but it's effectively the exact same rules. That's what I was saying before. There's no indication the 31st of March 19 date will change, but I would advise planning for that date to be the final. Where you've got repair payouts, this is completely different. That has a deadline date of 2020, but the amount that is taxable is only equal to the repairs that you make, unless you have to apply an excess amount, so that's the amount that you haven't spent on repairs that needs to go against the property. So if it goes against the property and it's more than the original cost, you've probably got a depreciation recovery income there as well. The only issue with repairs is that there is no deferral under any depreciation recovery rule. It's pretty much 2020. If it's above the cost, that's it. It's going to be taxable. And that's the same thing again. There's a lot of things that, if anybody is in this situation, they should be thinking about. We've got, obviously, potential tax bills, the money to pay the tax. If you're in a different financial situation now, you've got, this was 6 years ago, cash flow, bank funding, the ownership. You can't move that depreciation to another entity, so you can't just buy a property in another company or in a partnership or anything like that. It has to stay under the previous ownership. I would stress that you need to be aware of these issues and try and understand it. I know it's a very complex area. I've only really touched on this as a residential rental type scenario, but it is very similar for commercial as well. Pretty much same rules apply. You're just going to be probably looking at a lot higher depreciation recovery income amounts. And I would like to stop there. There's probably more that I would like to say, but if there's any questions that anybody has, I'll open it up.
Is really what we're saying is that all we're saying to you guys is basically make sure that you're elected and re-elected. The timing is quite crucial here. The ID are going to review every single rental property. You're going to send letters. Have you dealt with your UQC? How do you deal with it? And they know everything. I mean, I think I said,
I've already had a review for one client who we deferred depreciation rollover for, and the IRD specifically wanted a lot of information around when they knew about the payout. So it wasn't the amount of the payout. They wanted to know, when did you know about this? And I had to provide them a lot of information. So we're going to see a lot more of that. If you've had a insurance payout and you've had any depreciation recovered, or if you've had an accountant deal with that, it could be worth just refreshing your memory and being aware of the fact that the IRD might look at that. Try not to freak out if they do, and just see an accountant if they do.
If you want, just have a look at it. You may be absolutely fine.
Yep.
There may be issues. You've got time here to make those changes. And actually, we've spoken to the ID a lot of them, actually a few times actually, and they've been pretty nice. The old accountant have got to elect or even re-elect, and we've gone back to them and said, hey, pretty pleased this has been a bit of a mistake, and they've said yes, we'll allow that election.
Yeah, we've fixed up a lot of situations, mainly from previous accountants, where we've had to elect and they hadn't previously, even some for like 3 years. So they've been pretty lenient. We also provide a 1 hour free meeting that we can discuss your situation, because this is such a complex area. Every single client we see has a different situation.
It's ongoing, so just reflect on if you've had properties back prior to 2009, it would be depreciation you guaranteed you would have claimed. That's a situation we need to look at. And then look at the repairs and maintenance. So if you put your money in from the repairs and maintenance pocket, you probably want to start to use that money or show that you've done those repairs.
Yeah, we've seen situations as well where previous accountants may have actually taxed that repairs and maintenance payout when it was above what the repairs were. So just be careful with that in your own situations. If you have been taxed on that, just maybe go back and have a look at that. You can get anything reassessed at the IRD as long as it's up to 5 years. If anyone has any questions. Yep.
Here's the maintenance. Still on the slide before that, ceiling installation is 3.3 R value. If currently you've got, say, an R value of 1.5 or something, and you decide to bring it up to the standard which is now required, so would that be counted as a capital item would it be?
If you're improving what was there before, definitely capital, so you'll have to depreciate that, or it may not be depreciable at all.
So
It may be counted as a building, which is 0%.
we look at a lot of strengthening buildings and all that. So the case law's told us very much you actually, yes, you're required to strengthen it in that aspect, but the actual building's improved. So there's been a lot of court cases around that. So yeah, unfortunately, it could be depreciable or it could be non-depreciable.
If you've got insulation in your building and the insulation is sagged, you have to put more insulation on top to bring it back. But
Yeah.
it's floppier than the previous?
If, for example, you've got something you've had to replace and the only thing available right now is something that is obviously an improvement, that would be treated as repairs.
Yep. Because you don't have
Yep.
any other ability. Yep. And it's like we've had a roof situation where the tiles were quite specialised, but when looking at the tiles, the new tiles that they had to use, it was better, but in actual fact, there was nothing, they couldn't get the original product. And they didn't really want to get a lower product
Yeah,
in that sense.
you've pretty much, like, the onus is on the taxpayer, so you have to prove that you're in the right or you've got a good reason for doing what you're doing.
And at least thinking about it and documenting it, because then the idea, if you're wrong, you're not going to be penalised for that, because you've taken a position. Yes, it may be incorrect by tax law, but the idea say, well, you did think about it. You didn't just claim it and just not think about it. Makes sense. But happy to talk after presentations.
I think we've gone over our time, so.
Thank you for that. I think there's obviously lots of information there for everybody to consider, and obviously speak with your own accountants, or if not, I'm sure that Lance and Lisa would be happy to discuss further. Our next presentation is actually a video that's been recorded through from our national campaign. It was recorded on the methamphetamine and the change to the standards that were released by New Zealand Standards just at the end of last week. The presentation is with Zach Snelling and with the CEO of MethClear, who are one of the partners with the Ray White Group nationally. In your Landlord's little packs that we've given you for this evening, there is actually a special offer that MethClear have included. There is a discount there if you're having any testing done. It's 10% off on a lab composite, and they'll be talking about the different parameters and requirements for testing that have come up in the standards as well. So, press play.
Good evening everybody and welcome to our 2017 Ray White Landlord event. We love hosting these every year. The sole goal of the event is to pass on information to landlords all across New Zealand around what's been happening and what's been changing in the tenancy space, because there certainly have been a lot of changes of late. First of all though, a big thank you to all of our officers who are hosting tonight, and obviously all of you landlords and investors who've come along to participate, so a huge thank you to you all. One of the key hot topic issues right now that we want to pass on information around is that of methamphetamine. Ray White prefer to partner with the best and the most, the industry best leaders in their fields who give us the best up-to-date information, and obviously that's why we've got MethClear along tonight. So thank you, Adam.
My pleasure.
Great, so for Adam, everyone in the room tonight, can you give us a little introduction around what it is that you do and how you help our network?
Sure. So we built our business around providing education, deterrence and ultimately detection to our customers. We really like to strip away any form of sensationalism and just stick to the facts.
Great, so you help our network obviously with testing services, and a lot of what I find incredibly helpful is the information and the advice.
Yeah.
So thank you very much for that.
Our pleasure.
Great, so again with the information and advice, this is why we've got Adam here along tonight. So with everyone in the room this evening, Adam, we've got a mixture of landlords who might be private landlords, some of the other companies, some of our own obviously. What are your kind of key areas or reasons why more landlords need to know about methamphetamine?
Look, unfortunately New Zealanders have a problem with methamphetamine. This is a very real issue. Recent government estimates are around 40,000 adults are using this terrible stuff.
Wow.
That's not, and that number's going up unfortunately. So it is, for those that are involved in residential property, it does bring with it some pretty serious risks.
Yep.
And it's important that you understand what those risks are.
Great. So, I mean, you sort of obviously the risks there involved. Obviously, it's damaging to the inhabitants and the health of those tenants that are in properties, but can be very damaging to the property and quite costly as well.
Yeah, it's not a pleasant experience to go through. Having seen that on the outside a number of times. And I guess the difficult thing for us is often it's avoidable in so many cases.
Yep.
So, in terms of costs, it's really could vary from anywhere from sort of $1,500 right up to several hundred thousands of dollars. Obviously, those cases are rare. It's important to stress that, but it can be very expensive.
Yep.
And it is a very difficult process to go through.
So again, really important, everyone watching tonight is aware of the issue. It's not going away, unfortunately. We do need to tackle it head on. As you've heard, those costs can vary wildly depending on the circumstances. And then that leads obviously into your insurance as well, because that's been changing too, the space there.
Yeah, absolutely. So the insurers have been coming under some pretty heavy pressure financially in relation to methamphetamine claims for about the past year or two.
Yep.
They have made some fairly significant changes. One of those includes the increase of their excess. So excess have gone up quite substantially. They've decreased their total payable, so the cap for methamphetamine claims. They've increased their premiums, and at the same time, many of them have stripped out short stay accommodation.
Wow, so some key kind of areas there to be really aware of. We've got a specific sort of landlord insurance handout there separate to this for you as well. But just something to kind of be aware of. The issue's not going away. It's something we just have to tackle head on. So, again, I'm alluding earlier, Adam, we've got a mixture of landlords in the room. What would be your thoughts on best practice steps to kind of help prevent this becoming an issue for them in the first place?
Like many things in life, it comes down to getting really good advice. So that really starts with talking to your Ray White property manager. They are an absolute wealth of information backed up by industry specialists like us. Followed closely with rigorous tenant selection. That really needs to be very, very detailed. Obviously followed by the right of the landlord or the property manager to test the property. So that needs to be included in the residential tenancy agreement. And then lastly, the actual testing itself.
So some really good steps there, but one of them I really want to just highlight is that final one, is the testing itself. So I want to be very clear to everyone watching tonight, there is no legal requirement to test your properties, that's correct?
That's correct.
Yep. But why still, Adam, would you say unequivocally that you should?
Well, I think when your landlords, either current or potential landlords, look at the risks and then they take a look at their insurance arrangements, it will take very little time to come to the conclusion that it makes more sense to test and less sense not to.
Yeah, it's one of those issues, particularly with that baseline test where you're doing it pre-tenancy before someone's moving in. As a landlord, if you don't have that initial record to say that there was no contamination, if you find contamination later and after the event, even if you know it was that tenant, the liability and proving that is incredibly difficult without that test.
That's right, very slim chances there.
So again, seek out the advice. A couple of other really good points Adam raised there around the tenant vetting and the selection. So obviously we've got access to the best quality systems and databases to kind of check tenants before we're putting them in properties to kind of highlight any bad eggs, hopefully. And obviously with the tenancy agreements too, you do need specific clauses in there to allow you to test for methamphetamine. So make sure you're checking this, but obviously just seek out the advice of our Ray White property manager. We're happy to help in this space. Talking about testing, there's obviously, not all methods are created equal at all, and there are different methodologies around types of testing for properties for meth. Can you tell us a bit about that?
Sure. So first and foremost, there is no substitute for laboratory-based testing. So that needs to be your first stop. Yep. There are 3 different types of lab tests available in New Zealand, and they vary in terms of their complexity, their cost, and I guess their suitability. The first and the most popular is a service called a field composite, where basically multiple samples are taken in the field, they're combined into one tube, and the lab will express it as a total. Now the downside with this test is that it can be quite misleading.
Yep.
Okay, so it can come up with quite a large number, and obviously you can't tell where that number's come from being a cumulative test. The third option, which is the most expensive option, is individual testing. Now, incredibly accurate, the best service available, however, very expensive and often quite unjustified. So the good news is there is a middle ground service. So that service is called laboratory composite, where basically we look at taking multiple samples, individual samples from the property. Those individual samples are all they're sent to the lab, and the lab create an average without compromising the integrity of those individual samples. So if the average is of concern, we can ask the lab to analyse those samples individually, thereby allowing us to have a view of where the problem is, how bad it is, and helping formulating a plan to deal with it.
Great. So again, first of all, obviously lab testing is crucial. You've got 3 different variations of lab testing. On your handout sheet there, we do have sort of pros and cons of each, but I guess what I'm getting from you, Adam, now and passing on to the landlords, obviously, is that every method's quite different, probably really key to look at your specific case and why you're testing, or the evidence or any concerns that have led you to test, to then decide which kind of way you go down and which
That's
route.
right, yeah. And obviously get advice from your Raywhite property manager, or give us a call.
Great. So, and one of the key things we want to be talking about tonight is obviously the new standards. So these have come out just last week. For those watching tonight on Wednesday, one of the big changes there is around these levels that they've sort of really solidified. Can you tell us a bit about that?
Yeah, so 2 levels. A high use area defined as 1.5 micrograms per 100 square centimetres, and a low use area defined as 3.8 micrograms per 100 square centimetres. So the difference between the two really is a high use area is an area that's normally accessed by both adults and children, so living areas in your home. And a low use area is an area normally only accessed by adults and only for a short period of time, and not normally accessed by children. And that's really the key there.
Great, and so these levels that they've come out in the new NZS 8510 differ slightly to Ministry of Health recommendations that were sort of published last year.
That's right.
What are your thoughts on the new levels?
Well, I definitely think it's a step in the right direction. The 2010 and 2016 Ministry of Health guidelines were, by international standards, quite low. And they did create some confusion and some ambiguity in the industry, which is a problem. So I certainly think that the introduction of NZS 8510 will help the industry provide, a fit and proper service.
Yeah. And it's interesting you're talking about the different sort of international levels there, because I'm a huge fan of this new standard, because obviously it's been developed by a committee of sort of over 20 experts in different fields. We've got legal, we've got councils, we've got testing companies. There's all sorts of people that have come together to produce these levels and give us these recommendations. But what I'm sort of really happy about is they are in line with international standards, and perhaps countries who've had a little bit of more experience with dealing with the issue.
That's right, yeah.
Yeah, great. So really good to see. Obviously a lot of information to be taken from the standards that have just been released last week, as we mentioned, but what are some of the other key points that you've been able to pick out so far?
Okay, so critical one is separation of duties. So basically what that means is that those who provide sampling services, like testing services, aren't able to provide decontamination services. So that's a really good step in the right direction.
Kind of makes sense though, wouldn't it?
Absolutely. Look at that, removes a massive potential conflict of interest. So that's the first aspect. The second aspect is accreditation. So all operators in the industry will require accreditation. That will come in 2 forms, individual accreditation and organisational accreditation. Both are quite an involved process, and I think will deliver some really robust framework for, a quality service for people using the industry. And lastly, quality assurance. So some really robust methodology there in terms of ensuring the quality of the testing services provided by the industry.
Great. So ultimately we're incredibly happy about this at Raywhite, because it's providing some clarity and transparency around testing companies, obviously even with the need for accreditations now, which is fantastic. How they're testing, where they're testing, the method in which they're doing it. It's certainly giving us a lot more transparency, which has been sorely needed, I think.
Absolutely.
Yeah, so obviously a big fan of the standards, can't have come a moment too soon. If you want more information or some details on where you can go and find this and get your own copy, just talk to one of our Raywhite property managers. But again, meth's a pretty big issue. It's hard to sum up in one sort of short video. For the landlords watching tonight, Adam, where would you recommend they go to find out more?
Look, it comes down to getting good advice. Raywhite property manager, first port of call. Raywhite are backed up by specialists like us, so you can talk to us. You can pose any questions you like to us around your individual circumstances. So 0508 MethClear or methclear.co.nz. I'm happy to help.
Fantastic, and I recommend that very strongly. Talk to the guys at MethClear or your Raywhite property manager if you do have questions, because again, every case is different. The worst thing you can do is just go and try and sort it out without actually getting any professional advice. So again, seek out the resources there that help you. We do have a special offer on behalf of MethClear for tonight for anyone that is watching this video. So seek out your Raywhite property manager to get details on that specifics there. But again, thank you, Adam, for coming along tonight.
My pleasure.
Thank you everyone for watching, and I hope you've got some great information out of the update.
Okay, for those of our existing landlords, we did attach some light reading for you with your statements at the end of the month. We posted you the link to the New Zealand standards. There's a mere 60 pages of reading there for you when you have a moment, but you know, good to have get you read through. Sorry.
Out of interest, what does Ray White use out of those three tests as the
We use the middle one. Generally, as a rule, most of our owners, it's obviously in consumption. I don't think we've done any of the first option, but we use the lab composite as a rule. And for the very reason that they said before, because you have an average, but you have individual samples. So if there was any reason or concern, you can go back and know that those samples are clear and not contaminated by being in a bag with everyone else, and that I can identify the source. It's really important, and clearly it's like benchmarking your property, you know, in the overall condition. It's just another line in the sand that's provable for you and for your risk management.
Have you got any statistics on the amount of properties that are affected by meths?
In Christchurch, currently, I couldn't quote off the top of my head, I'm sorry. We have been told by some of the people in the industry that apparently Christchurch is not so big on the production. We're big on the smoking of it. It's a plus, maybe. So I guess maybe we're going to get lower levels. As I said, as we get through, we've had very little positive within our database so far, but you know, there are obviously a lot of properties still to be, and unless you do it, we're never going to know. And it's not a surprise that particularly any of us want to have, especially when we have a tenancy up and running. You know, there's a lot to deal with at that point. So we certainly recommend to our owners at the beginning of any tenancy and between that all the tenancies are tested for your protection. But anyway, I'm going to hand over to Kat Janes now from State Insurance, who will give you her spin on risk management.
Good evening. It's a little bit far too informal for me, and I'm just talking with no slideshow, but I can give you a figure. As from March this year, 50 claims a month we were dealing with in regards to meth. However, so I'm from State Insurance, but I'm actually a combination of brands. I'm State and AMI. As you can imagine, State and AMI are owned by the same company now, and we work very much hand in hand beside each other actually in Riccarton Road and what's best for our customers. So if you approach me in regards to a state home but you're an AMI customer, I'll be looking what's best placed for you policy wise and discount wise. So we are hand in hand all the time. But what I want to talk to you tonight about is two things. In regards to methamphetamine contamination, IAG does put out a booklet for its landlords. Due to our sustainability policy, I've not got a whole lot printed out, but I'm here after this with business cards and will personally take your names and get this information to you. Okay, so we're very, very much on top of this. And as I say, we're dealing with a lot of claims. But what I want to particularly talk to you about for your landlord cover, although all our policies do cover meth contamination, we've got a $30,000 capped cover with a $2,500 excess on all rental policies. The most comprehensive policy that we can offer for our customers is the state landlord policy. Yes, you do pay a little bit more, but in regards to something worth 300, 400, 500,000 plus, it is your best protection. Now, the state landlord policy comes with a sum insured replacement on the home, and it comes with $10,000 worth of landlord contents, and the cover can be increased. So we start at the minimum $10,000 worth of landlord contents, and then you can nominate your figure going up. It's part of the policy. It can't be removed. It just automatically comes there. Now, the landlord policy is the only policy that covers malicious damage, vandalism, and theft by the tenant. So my first conversation with my customers is, have you been a landlord before? Do you know these tenants? Because this protection is your lifeline. I would recommend for all new landlords starting out on our most comprehensive cover, and then if need be, further on down the line, we can look to reduce cover and reducing costs for you, but definitely the landlord policy to start. Most landlord policies come with a loss of rent feature. For example, if your home can't be lived in as a result of a loss covered by the policy, i.e. earthquake, you'll get a loss of rent cover. The landlord policy covers a whole lot more. The loss of rent covers may include, or do include, if your tenant runs off without paying the rent, you're covered for loss of rent. If your home can't be lived in as a result of a loss covered by the policy, fire, water damage, explosion, earthquake, you're covered for loss of rent. If your tenant can legally stop paying the rent under the Tenancy Act, you're covered for loss of rent. It is a very, very comprehensive cover, and it is the best protection for your most expensive risk. Let me just get to my page. So we've got the methamphetamine contamination cover, which is on all policies. As I said, you've got a $30,000 cover with a $2,500 excess. And for me, being a Canterbury earthquake specialist and insuring homes and home purchases, I've actually just insured my first methamphetamine rehabilitated home. So as far as we're concerned, once it's decontaminated, it's back fully insurable, no problems whatsoever. You do pay a little bit more, but as I said, how much are you prepared to pay for your risk? And the beauty of us in Christchurch, we are the only place in New Zealand that has a dedicated state branch. Walk in, talk to us about it, and honestly, we would do our best to help you. We're all Canterbury earthquake specialists. We have a dedicated claims line. We can get things done faster and more seamless. And there's times where we'll go over and above and get the information for you because we're the specialists. It's all well and good ringing through the 0800 number, and they're fantastic. But the forms that sometimes are required to be filled in, and still 6 years later are required to be filled in, will help you do that. So please come in and see us. But the landlord policy, as I say, if you're a first time landlord, I would definitely recommend your comprehensive landlord cover, and then we can look to perhaps move you to price-wise, cost-wise, a more effective cover. But it is your one-stop shop, and it is your absolute robust safety net in regards to rental insurance. Do I have any questions? Unfortunately, we are bound by the sustainability policy, so I can email this to you. Sorry, sir. Yeah?
Yeah, I just wondered, do you have any clients on the books with over 10 properties?
Absolutely, and some of them I manage myself. Particularly, what's going on at the moment is the as-is, where-is repair, which become rentals. Yes, and we will case manage them because they're important customers to us. Absolutely, and it is huge for the person owning all those properties to try and manage it from an insurance risk purpose. So sometimes we will dedicate a person like myself or one of my other colleagues that will personally case manage these particular customers and handling their insurances. And as I say, we've got the branch, so only place in New Zealand with a state branch. We're really, really lucky because we've not only got the complexity of the methamphetamine, we're still going through the complexity of the earthquakes. Anybody have any questions? Well, I don't have a lot to say. As I say, we've got a state branch here. We work closely with AMI. If you've got any questions whatsoever, we've got a branch. I've got business cards down the back. But you need to be really passionate, as we are, for this. I get a little bit shocked that the amount of what the asset is worth, that people aren't quite taking this seriously. Have you seen that program, Renters? I'm a renter. I had to ring up my landlord and say, please don't think I'm like that. Because, you know, you might even know the person, but the damages that have done. So really, and malicious damage, vandalism, theft by a tenant, it is so, so very common. But just like to touch on the 90-day non-methamphetamine cover. We would be having discussions with you anyway as your insurance company if you had tenancies less than 90 days, because there's a very, very fine line where it meets the EQC criteria under residential dwelling and where you actually have to move under a commercial policy for a boarding house. So we would be having that conversations with you in regards to your insurance if you came to talk to us about it under the 90 days where there is no methamphetamine cover. But we're here and we're really friendly and we're on 117 Riccarton Road and we're not going anywhere and we're all specialists and we actually really love our jobs. So please come and talk to us about it. If you've got any questions whatsoever, either AMI and state with your current policies you're unsure of, or you're looking to take out new cover, as a landlord, please come in and talk to us about it. You know, the amount of money involved in these risks, it's not like a new car, it's not like a new bike. It's as important to us as it is important to you. Yes, sir.
So it doesn't really matter whether you're with AMI or state, it's the same policy?
No, and that's what we get very much. Thank you. That's an excellent question. They are very, very distinct brands with very distinct policies. I believe that the AMI policy is a very good rental, but the state comprehensive landlord is your one-stop shop. But no, we may be owned by the same parent company, which is IAG, which I call the money behind the throne. But no, state and AMI are still very distinct companies, very distinct different policies. There'll be no intermerging. They'll stay their own brands. We're just one big happy family in Christchurch because we've all been through the earthquakes. We're all still living it. We're all still rebuilding our own homes and our own lives. So it was a case of let's get on together and find out what's best for our customer.
What's your current credit rating as the merged company?
At the moment, states, AA minus, which is very strong claims paying ability. And we're very lucky. We have a huge company backing us, IAG, Australia and New Zealand. We don't have any problem with funds. Our claims paying ability is very strong because really that's what you take out insurance for. Any mug, this is what I say to my customers, any mug can sell you insurance. You want to know what's going to happen to you at claims time. You want to know that your claims are going to be paid. We used to have a saying, we paid 98% of all claims. The only 2% of claims we don't pay are fraudulent because we are in this as an insurance company to pay the claim, which is what an insurance company is all about. I didn't come from an insurance background. I actually don't know how I got my job, but I'm extremely passionate about it now. I came from a mental health background. But yeah, but for me, I want to pay the claim. You know, it's more important to me than selling you insurance. We want to be able to pick it up where you fall down when it comes to your risk. And your risk is important to us as it is important to you.
We've all heard horror stories from the earthquakes where insurance companies and AMI would be one of them, but haven't done what they've said they're going to do.
No, and AMI in regards to earthquake is being handled by the government called Southern Response. But in all of the insurance's defence, I don't know if you people realised, we weren't the biggest disaster in history. We're certainly not going to be going forward the biggest disaster in history, but we were the biggest insurable event. We made precedent. Oh my goodness, yes, we've stuffed it up, we've got things wrong, but what a learning curve for all of us. So apologies for some people that have had a really, really bad go, but we had to set the ground. Nobody had ever done this before. As I said, there's been bigger disasters, and there's Japan, there's San Francisco, etc., but the biggest insurable event, and it was a test case. It was test and learn, and it was the biggest test and learn for yourselves as customers and for us as insurance companies.
So what's the one thing that you've done that makes you stand out so much better that you will do it once and do it right?
For me, there's loads of things.
No, I want one.
One. All right. Okay.
Having gone through it,
Yeah.
nobody did it once and did it right. They
No.
keep coming
Yeah.
around
Yes, and I'm sure going forward we're going to make more a commitment to be consistent. I think consistency is where we fall down, and certainly going forward.
And knowledge.
Yes, yes indeed. Yeah, absolutely.
Nobody had the knowledge.
No, nobody did.
You need to keep that knowledge.
Mm.
Because we're sitting on a big fault line, right?
Yes indeed, the Alpine Fault. Yeah. Yes indeed. Yeah. And there's no scares in the insurance company. I mean, we're aware of the Alpine Fault, so don't panic, people. But going forward, I shouldn't actually be talking about claims because I'm not qualified in claims, but I can tell you that the process is going forward for the likes of what's happening in Kaikoura. It's so much easier. It's so much easier. I'm sorry they had to learn the hard way from us Christchurch people, but we all had to learn the hard way. And we made mistakes, and I've got some horror stories. I've got some people that died before the repairs were due to start, and it's absolutely heartbreaking. And it's still heartbreaking, 6 years on, the stories of what we hear and what these people had to go through. But we all went through it with you as well. We're all still going through it. And as I say, we've got a dedicated face-to-face 6-person specialist team sitting on Rickerton Road, ready to help. No appointment necessary, just walk on in and I'll be at the back of the room. I've got cards and any query that I can't answer, I will get answered for you on behalf of my brand, state or AMI. Really good? Thank you.
Thank you very much, Kat. Obviously, it is challenging from both sides, and as you say, a lot of us are still working through. Our next presentation, unfortunately, we were hoping to have some compliancy speakers, but unfortunately, Tenancy Services compliance team were unable to attend this evening, so we have picked up a video that was prepared as part of our national evening. This is presented to us by the Tenant Protection Service. This is a service that, as a Ray White, as a company, we have access to. There is legal counsel supplied by Scotney Williams, who heads this company, and there's good information about the risk exposed to modern landlords, and there's quite a good little section at the end about some of the documentation. Obviously, you know, the leases and contracts are an extremely important part of your documentation, and you need to make sure that you're covered as owners. There is a system that's been developed and we are about to start using in our own agency, which will be mentioned in here. But anyway, we'll press play.
What does it mean to be a modern landlord? They need to have a detailed understanding of tenancy law. They need to have the right tools to identify bad tenants. And they need to have up-to-date documents to protect their investment. Let's start with tenancy law. And there's not many people in New Zealand that know the subject better than Scotney Williams. Scotney has been working in tenancy law for over 30 years, originally working with the old Tenancy Services. He now runs property management consultancy firm, the Tenancy Practice Service Limited, and provides consultancy to all Ray White property managers. The most recent legislation he has had to get his head around is the amendment bill to the Residential Tenancies Act. Landlords will be well aware that all rental properties now need to have smoke alarms and an adequate level of insulation by 2019. But now even more changes are set to kick in.
Careless damage, unlawful tenancies and methamphetamine are all targeted in the new bill prepared by the Minister of Building and Housing, Nick Smith. The changes will be implemented by the end of the year.
The Osaki Court of Appeal decision last year, which was sparked by a careless fire, resulted in one of the biggest changes Scotney has ever seen in the residential rental industry. Now the rental damage law is set to come full circle. Pre-Osaki, tenants were liable for all careless damage, so if they did this, they would have to pay for it.
The old law seemed to work pretty well. If tenants did damage, then they had to pay for it.
Because of Osaki, if a tenant carelessly did this, then the landlord would have to pay for it if they had insurance.
The reality is most landlords have insurance, and the Osaki case changed things dramatically, caused a lot of injustice and uncertainty, and it simply had to be corrected.
When the bill gets passed into law, the new damage law will see tenants liable for each incident of careless damage, up to the value of 4 weeks' rent, or if it was more, the landlord's insurance excess. So if a tenant did this, and then carelessly did this, they would be liable for each incident of damage, up to the value of 4 weeks' rent.
Tenants will be liable for the damage they cause, but they won't be liable for claims for total loss.
Methamphetamine is another major issue targeted in the amendment bill. Meth has become a far-reaching problem for property managers, landlords and tenants alike.
The new methamphetamine level has just been released. The new law makes it very clear that rented properties must not be rented out if they're contaminated with methamphetamine.
TPS provides property managers with online tools to do credit checking and background checking. Background checking is relatively new in New Zealand and can access court orders relating to meth and other drug crimes. TPS Managing Director Matt Holt drew on a personal experience with one of his own rental properties when developing the background checking system.
When I first became a landlord, I had an applicant apply. They seemed really good from the credit check. However, I had a bit of a gut feeling, so I ran their name through some tracking software we have access to as debt collection agents. Lo and behold, a couple of aliases came back. So I put these alias names through the credit checking system, and if I hadn't done this, I would have been the 5th landlord in a row with a $5,000 debt with this person. It clearly showed me that credit checking alone is not enough.
From here, the TPS background checking system was born. With a lot of the data sources already readily available, they launched their system to the property management industry in 2013.
The system won't give you someone's criminal record, but it's the next best thing.
This background checking system accesses data from credit bureaus, the High Court, Court of Appeal, Tenancy Tribunal, and many other third-party sources.
No system will give you access to everything, but ours will give you access to a lot of criminals who have done some serious crime. Plus, our system provides over 10 years worth of tenancy tribunal orders. The Ministry of Justice website only goes back 3 years.
The modern landlord can only access a small portion of this data. Property managers, on the other hand, can access all this data to pre-screen tenants and identify a bad egg before it's too late. Without up-to-date documents, the modern landlord is still vulnerable. Property managers can now complete the entire tenancy application and agreement online with the Tenancy e-bundle.
The Tenancy e-bundle is an online tenancy application and agreement. It offers property managers the most robust tenancy agreement on the marketplace.
The Tenancy e-bundle, which is used by a number of Ray White property managers, gives landlords significant protection with a library of clauses.
The clauses of the Tenancy e-bundle have been drafted to protect the property management firm, and the investor that owns the property itself.
The library of clauses are constantly updated by Scotland, ensuring that they stay up to date with legislative changes and changes in the market. One of the biggest changes has been the growth of Airbnb. The Tenancy Practice Service have drafted a clause targeting this sort of subletting.
Tenants are cashing in by subletting on Airbnb to Lions fans. We've updated our subletting clause to prohibit tenants from doing this without breaching the Residential Tenancies Act. This sends a clear message to tenants that this is unacceptable.
Over the past 12 months, landlords have had their fair share of change, and it's far from over. Being a modern landlord isn't easy. Property managers know this better than most, but they have the right guidance to deal with upcoming legislative changes, the tools to avoid bad tenants, and the documents to protect your investment.
Good evening all. I'm introduction to Tony McPherson, the principal of the McPherson Property Management. But yeah, I hope you all have gained something out this evening. There's a hell of a lot of information to take on board in this time of this last 12 months has been a lot of change. It's very pleasing to see we've now got some clarity around meth, and though it certainly has been a challenge, we look at the new legislation that has come in this started off on the 1st of July, and as Scott has pointed out, the number 2 Act coming through. So interesting times in New Zealand property and the market outlook. Quite often it's judged on the Auckland market, and we've been that market has been through a fairly major boom, but certainly in recent months it is certainly tempered back right down, and in fact some of the initial raw figures coming out at the moment see the sort of breaks going very much on the Auckland market. Christchurch market's quite different. It did have its boom, and that was about 4 or 5 years ago. Since then, it's pretty steady, and but the media tend to focus and around what's happening more nationally, though, from Auckland. I think we're in a very interesting time for the true professional property investor. These sort of times, especially the last 12 months and now, it sort of sorts them out. So we don't have what we call the accidental landlord. You really, it is a time when the prudent investor can really make some traction. We've seen prices quite steady here. The government have achieved with what they want to do around regulation on LVRs. That has occurred. But we still have an increasing population, and certainly in Christchurch, what we're seeing is a movement also in the population back to the inner suburbs, and as we see the new commercial buildings within the CBD become workplaces, we do see over the next period a certain increasing demand for the sort of inner city living, the sort of semi-density living will come back, because very soon we'll have a very attractive place to live in the area that we are at the moment, as many of those large buildings are due to be utilised shortly. And again, we've got the ongoing recreation and dining and entertainment facilities opening. So look, we're feeling extremely positive about what's happening. I believe we've been through the hardest parts about a bit of the unknown around all these changes of legislation. We now have clarity. People want to live in safe, warm houses, and those who are providing that will come through at the end of the day. So I'd like to thank those who presented this evening, and I'd like to thank you all for your attendance on a rather chilly evening. And look, our speakers will be around, and our team. So feel free to ask any questions. Thank you.